How are we getting on, guys? So I just thought I would jump on and provide you all with some live analysis, just a live update essentially on the my Forex watch list coming into the new week. So obviously we're coming to the end now of this trading week. I will be doing a Sunday sessions video this weekend highlighting these same markets, but I thought why not just jump on the markets today, provide you with some updated analysis, and maybe we could come up with some potential trades just to see us through till the end of the day. So what I'm going to do is I'm going to go over Euro USD first, probably perform a top-down analysis on this market, giving you guys a better understanding of my higher time frame bias as well as my shorter term bias. If you have any questions or if you need anything or you're unsure about anything I go through, then please leave them in the comments and I'll make sure to answer them as soon as. But yeah, essentially, we're just going to do some updated analysis on the pairs that I'm looking at trading this coming week, and then go from there, really. So, looking here on the Euro USD, we can see if I just go to the higher time frame structure, we just look at this higher time frame structure. Looking back now at the weekly, let's say, we can see how we have been delivered with some bearish structure. Price is definitely within a bearish phase at the moment. Yes, this market is bullish overall. So we are looking for a higher time frame bias, and we're looking for our overall bias for the market. We would say that this market is a bullish market. So realistically, we want to be trading in a bullish way. We want to be looking for buying opportunities. But with price currently being within a corrective phase, it would beg to differ that realistically we should be looking at those sell positions. So, whilst price is within this corrective phase, ultimately this market is trading us lower in the market, and essentially we should be looking for those shorts. So, what I like to do is obviously just zoom in to more present time. So now just looking at data going back to 2016. 2017, 2018 into present time, we can see how we've had clear bearishness, which is expected as this market is within that corrective phase, a higher time frame bearish correction. So we can expect this bearishness to be introduced into this market. And if I just draw a path tool out, we can just highlight those points just so they're a little bit more obvious. We have a low set, a high set, we have another low set. No, that's incorrect, should I say. So if we go from here, we have a low followed by a high. We now have a lower low. Hopefully we'll have the introduction of a lower high, and then what will follow is a lower low. That's obviously following that bearish structure that we are seeing on the higher time frames. We want to see price trade us into this higher time frame demand zone. Once we see price penetrate this demand zone, I am expecting price to essentially flip. So what we'd want to see is an S&D flip, trade price higher and taking price up in the markets, because as I say, this is a bullish market. So it's important to just remember what the overall structure of this market is. So if we just highlight this out just quickly, we can see how, let me just move this. Yeah, that's fine. Price comes up, price goes up like this. So we can see how this right here, so if we're just looking at this structure, this yellow structure, we can see how this is clear bullishness, okay? So when we zoom in, yes, the market is overall bullishness, but we want to be looking for or to take advantage of the corrective wave that price is currently within. So price is within a higher time frame corrective wave, yeah? So this is highlighting this corrective wave. So obviously a higher time frame bearish correction is going to deliver us with lower highs and lower lows. That's exactly what we're seeing on this white structure here. So just highlighting these points gives you a better understanding and allows you to see this structure more easily. So obviously I'm wanting to see price trade up and into this fractal supply zone. For supply to be introduced, that should give us an S&D flip to the downside. Trading goes lower and into this higher time frame demand zone, where I'm then expecting an S&D flip on the extreme higher time frame structure to then go on to create that next impulsive wave trading goes higher, yeah, and that would be following the extreme higher time frame structure as well as following this, a more lower time frame structure. So if we just get rid of this for the time being, and we just highlight this as obviously bearish structure, so price is within a fractal bullish corrective phase. So yes, it's in a higher time frame bearish correction, but it's actually within a fractal bullish correction on the higher time frame bearish corrective wave. So what we are seeing now is actually price putting in a fractal bullish wave within this bearish structure. So what we should be looking for is for areas of demand for places to potentially buy into, because with price trading in a bullish way, we obviously want to be looking for those demand zones so we can look to buy from them, giving us the ability to trade with a refined entry. Okay, so when we are looking at this, what I've done is I've highlighted a last buy to sell region. This is an unmitigated candle on the weekly time frame. Price hasn't yet come to clear this zone, hence why I've marked this out as a potential area to go short from. So what we want to see is price to continue trading us higher into this supply zone, where we will then expect price to do a full S&D flip, trade us lower into the extreme higher time frame the extreme higher time frame demand zone, should I say, where we then expect that next impulsive wave to trade us higher. So because we are completing a top-down analysis, we understand, and we're working backwards in a sense, because we are going from the extreme higher time frames right the way down to the fractal nature of the structure and this market. We are able to get a complete story and a complete guide on where we want price to go, essentially. So as I say, we have a target here to go short from, and this is our higher time frame target to go long from. So now that we have those, that's brilliant. We've marked those out as areas to potentially trade from in the coming weeks and months. What we like to do now is obviously go down on the lower time frame. So now looking at the 4 hour and really seeing the structure that price is putting in. So obviously, with price being in a fractal bullish correction, we are seeing the introduction of clear bullish structure, right? And that's a given. So if we just go down to here and we look at the structure that's being put in, we can see that a low has been set, followed by a high. We've then had price come down to set a higher low. Price has come up to set a higher high. Price has come down to set a higher low. And we can expect this to continue. Trading goes all the way up and into that higher time frame supply zone, yeah? Now, what we also need to be careful of, and what we also need to be we need to make sure that we are aware of, is that price can come down to put in a higher time frame corrective wave. So when we look at this and we look at this structure, we can see that yes, price is putting in that bullishness fractally, but it's also probably going to put it in as a higher time frame thing as well. So if we mark this out as a high, price came down to set a higher low, price comes up to set that higher high, and then that's obviously when we have that S&D flip, yeah? So by price coming down to here, breaking these what would be considered protected lows within bullish structure, yes, it is breaking those protected lows, but it is still following that higher time frame bias. So I have this area as a potential area to buy from. So what I'm expecting to see now is, because I've been trading this market, we've placed some long positions in this market this coming week. We actually placed a long here last Friday and traded price all the way up and into this higher time frame supply zone. So what I'm expecting to see now is price to put in that corrective wave, whether it be a corrective wave that trades us beneath these lows and into this higher time frame demand zone here that I've got, or it continues to follow this bullish structure that we are seeing present itself on the 4 and 1 hour timeframes. So either way, price is going to be trading bearish. I am more than adamant on that. So what I've done is I have highlighted this out here as a last protected low within this bullish structure, as these lows here went on to create this high, which is the highest high within this structure so far. So now what we want to see is price actually break these lows, as this would then tell us that this bullish correction here has finished, and we are now going to see the introduction of bearish structure. So by price breaking structure here, breaking these protected lows, we can expect price to pull back and start respecting the highs, start protecting the highs, and breaking the lows, because that is following bearish structure, right? So when we have that break of structure, that's our confirmation that price is no longer following the laws of bullishness and now following the laws of bearish structure. So what we would do is we would essentially find a supply zone, a fractal supply zone within the initial impulsive wave, being this one here. So if we just change the color of it to say white, we would look within this white impulsive wave that has broken the structure to the downside for an unmitigated last buy to sell region, as that would be an area that we could look to trade from. So this allows us to get our refined entries. So we would basically find an unmitigated candle within this impulsive wave for price to trade up and into, grab any remaining supply that it needs to before trading goes lower. This is where our entry would come from, as I say. So it would literally be a case of waiting for price to pull back after we've had the break of structure to the downside. We would have our stop loss just above the zone itself, and then we could look to set our take profit. What I like to do usually is set my take profit above or below the last higher time frame structural points in the market. So I'd probably set it somewhere around here, as this marks the last higher time frame. Or we could actually set it as low as here, in fact, because these are the last structural points on the higher time frame structure. And as you can see, we'd walk away with a lovely 1 to 19 risk to reward ratio. So if you're risking 1%, you're looking at 19% returns. If you risk 2%, you're looking at nearly 38% returns from this position here. Me personally, I risk 2% of my equity. I have, however, taken partials from this position, but this was another trade that was actually sent out to the clients in the VIP chats. This was a brilliant position. I've got clients that have made anywhere from 11% all the way up to 22% from this trade here. If you look at my trading view, you'll see that I actually gave this to everyone on TradingView as a potential trade that could be placed. So there's no avoiding the fact that this was sent out as a free potential trade for everyone, but also to the clients in the VIP chat. So that was a brilliant trade there that we've taken advantage of. As I say, we are now wanting to see this corrective wave trade us lower and into this down into this market, into this higher time frame supply zone, demand zone, should I say. And then from here, we want to see price trade higher. So because we understand both the extreme higher time frame structure as well as the fractal nature of the structure, we've completed a full top-down analysis. We know, or we believe we know where the markets are going to go. So that gives us the opportunity to get involved in multiple positions within this market. So if we just go to, let's see if I can go to the, let's have a look here. If I can go down, I'm just trying to think how low of a time frame I could probably go, just to show you obviously the multiple opportunities and the multiple trades that we can place. Let me let's have a look here. So obviously we want to see price traders bearish from this point, okay? So it's not going to be very clear, but I just want to show you the multiple opportunities that we've now been able to source based on doing a full top-down analysis. So we want to see price go short from here, probably trade us into this demand zone, as this is a 4-hour demand zone. This is going to then encourage price to trade higher and into this higher time frame supply zone. This is obviously a weekly and daily time frame supply zone. From there, we can expect a full S&D flip to trade us into this demand zone all the way down. So we'll definitely be looking to go short from here. And then once price eventually trades us into this demand zone, we can then expect a full higher time frame impulsive wave to trade us higher, as this market overall is bullish. So we want to be looking for those buys. So this would be a perfect area to look to buy from. This does mark an unmitigated last sell to buy region within the extreme higher time frame structure. So you can see here that we have the opportunity to get involved in this market multiple times. We can get involved in temporary shorts, trading goes lower and into this demand zone here. Then we could go long from here. Trading goes up into this supply zone, where we then look to go short yet again. We'd close those short positions, and then we'd look to go long from here, trading price all the way up. So we have 1, 2, 3, and 4 positions that we have found just from completing a full top-down analysis. Now, if we look at this structure as well, and we look at the path that we have drawn out, would we say that this correlates with how the market is playing out and how the market is acting? I would say so, definitely. As you can see here, price is trading us in a bearish way. So if you just look at this, and this is an important thing to do, is to make sure that everything correlates. So you can see here that by drawing this path, does that follow the structure? So you can see here that the path we've drawn out, we want to see price trade up and into this. Price can trade down and trade up and into this and then down, and that would still be following this entire correction and impulsive wave. So that follows that. And then from here, we want to see price go higher, right? So if I just get rid of this, that's obviously our path that we expect price to do and put in. Then from here, we want to see price trade all the way up. Change this to yellow. You can see if we go to the zoom out, we go to the weekly maybe. You can see how that's following bearish structure perfectly. And then this goes on to create that next high trading, goes all the way up and into the market, creating new structural highs. And you can see that would come to surpass this. So then when we zoom out and we look at this structure again, now with our yellow path, does this correlate with the higher time frame structure? And as you can see, it absolutely does. That follows the bullish structure that we've predicted. It follows the bearish structure that we are predicting here, and it also correlates with the fractal positions that we are also looking to take part in. So you can see just by performing a top-down analysis, the power that it has in trading opportunities. Yeah, I mean, this is all just looking at supply and demand and looking at the structure in the market. So it's smart money concepts and looking at the structure in the market. But yeah, that's my analysis for Euro USD. As I say, if we are looking for trades now in the coming days and weeks, let's just go back down to the hour time frame. I'll tell you exactly what I want to see. So as I said to you earlier, I want to see price trade us below these lows here, as that would be a break in this protected low. As we know, in bullish structure, we have the production of higher highs and higher lows. The lows are protected, the highs aren't. So with this breaking, that would be disregarding bullish structure, and that would encourage the behavior of bearishness. So I want to see a break of structure take place here. Once we have that, I will be looking for price to pull back. As soon as price pulls back into a valid area of supply, that is when I'll be looking to get introduced into this market. But even if you guys just got involved in sell positions here based on this penetration, you would have been up nicely now. If I just set my stop loss here, we can see that price is currently running near enough 2RR on this position. If you would just place a short based on the analysis that I provided in the Learning Lounge group chat and on TradingView earlier on this morning. So price is playing out exactly how I want it to. It's just about being patient, waiting for the confirmation to get involved in those short positions. As I said to you earlier, the reason why I'm waiting for this break of structure, the reason why I'm waiting for the pullback is because I want that refined entry. It's all good and well getting involved in short positions here like this. We could quite easily get involved in short positions like this, don't get me wrong. And we could trade price all the way down into this point. So when we set our take profits, if it's a bearish position like so, I would always set my take profit just above the last structural low within the higher time frame structure of a market, because that can almost guarantee that price is going to take profit. Because if you think about it, in bearish structure, we have the production of lower lows and lower highs. So if this is following bearish structure, which we believe it is, price should, in theory, come to trade beneath these lows that have been set here. So by setting our take profit just above, that guarantees that our take profit should be achieved, because this wave that takes us lower now should go on to trade us lower than these lows here. That's following bearish structure, right? So that would be, just going back to my example, obviously this is a brilliant risk to reward ratio, a 1 to 13. But if we came to trade into this market with a refined entry, and we managed to find an entry with a 10 pip stop loss or a 7 pip stop loss, something real small, because we found an unmitigated area in price. Yes, we're not getting in as high, but you'll notice that our risk to reward ratio increases exponentially. So whereas we were looking at our 1 to 13 risk to reward ratio, with this position here, we're looking at a 1 to 41. So that's why I like to wait for further confirmation, because not only do I have a higher probability of being successful with the positions I'm placing, but I also have an increased risk to reward ratio. But looking at this now, if you guys have placed short positions on this market from this supply zone here that I suggested, then you should be up very nicely. We're looking at 2RR now that we've achieved so far. So, I mean, it'll be interesting to see how price plays out over the course of this live. But I am definitely looking to get involved in this market very shortly in those sell positions. Some people may have got involved already with, preemptive trades, or down to how aggressive you are with your approach. But me personally, I will be waiting. I will be waiting for a bit more confirmation in order to get involved. I'm adamant that price is going to traders lower. Don't get me wrong. I'm definitely adamant that price is going to traders lower. I just want that extra piece of confirmation just to give me that added probability, and also the opportunity to get involved with those refined entries. But yeah, that's my analysis for Euro USD. What I'm going to do is I'm just going to set an alert around here just so I can see if price pings back up, giving me the opportunity to get involved in those shorts. Just highlight this to here. What I'll do now is I'll head over to the Great British Pound to the US dollar market. Just going to zoom in slightly on here so just we can come back to it quickly if we need to. So heading over to the Great British Pound to the US dollar market. Again, this is another market that I trade heavily and have done for some time. What we obviously want to see now is price to continue trading us up and into the supply zone, and then for price to go on to trade us lower. This is a bearish market. If we just look here, we are seeing clear bearishness being introduced. This is just old notes from one-to-one sessions. Let me get rid of this. But we can see here how price is evidently trading in a bearish way and has been for some time. So we obviously want to be looking for those short opportunities. But again, if I just highlight them out just to make it a little bit obvious, a little bit more obvious for you all, we can see how price is set on that structural low. We want to see price come up to trade us in to set a new structural lower high. Price to go on to then set a new structural lower low, yeah? This is obviously following that bearish structure. And this is exactly what we want to see. So I'm just going to get rid of that. Oh, no. There's a path tool that I want to get rid of there. There we go. So as you can see, that's following clear bearishness, right? So the supply zone that I have found here, I just want to show you all why I believe this is valid. Because right here, we have a lot of buy orders. This is an institutional footprint. And basically, price needs to come to trade up into this to clear any unmitigated, to clear the unmitigated candle, to introduce that supply, and that should, in theory, flip that supply and demand balance. We should see price start to trade us lower. So what we are seeing at the moment is price put in that higher time frame corrective wave, trading us higher, so bullish structure. So we could be looking to buy into this market before we sell longer term. So what it would be a case of doing is actually looking at this structure now for any valid demand zones in order for us to capitalize and get involved from. So we just go down to the hourly time frames. I mean, I can see an unmitigated candle here. There's also one here. Can't seem to. There's also this here as well, actually, which price is probably looking to pull back into now. But this is also valid. So there's quite a few areas at which price could come to trade into before taking us higher, this being one of them. So we may see price actually trade us down and into this now. Get my path tool up. Before taking us higher. Price may want to dig deeper, potentially trading us into this. So I'm just going to set an alert for. We may see price trade us down and into this one here. Or there is another one here. So there are three areas at which price could come to trade down and into before taking us higher in this market. So realistically, we could look to short before we buy, before we short. But I mean, if price is only going to come short to here and then trade us higher, there's probably no point. By the time that we've had confirmation of bearishness, this zone is probably going to be approachable as well, because this would be the last structural point that we'd mark out. So we'd want to see a break of structure here, so price to surpass, then price to pull back. So we could look to potentially go short to one of these two if this doesn't stand. And then from here, we could obviously look to go long. But let's just see how price reacts to these. I've obviously got these zones marked out here. If you guys want to mark out the zones yourself as well, by all means do so, as potential areas to buy from. But let's just see how that plays out. I'm going to set an alert here just so we can see how price plays. Now with XAU USD, if you guys have not seen my analysis on TradingView, then go and have a look at my XAU USD analysis. You'll notice that we actually bought into this market all the way back in March, and we took advantage of this entire move, taking us higher on 1, 2, 3 positions. There was 3 positions that we took full advantage of. And then what we saw and what we wanted to see was price to penetrate the supply zone, for supply to be introduced, and that flip the supply and demand balance. From there, we have actually seen that. So we saw that this bearish position here that we placed, a sell position, recently took profit. If I just zoom out, you can see that we just took profit just the other day, which was amazing. That was another killer trade, a long-term position, obviously. But what we are wanting to see now, because price is trading us lower in this market, believe it or not, what we want to see now is for price to put in its first higher time frame correction before trading us lower again. So we've got a low set. We want to see price come up to set a lower high, and then price to go on to set a lower low, continuing this bearish structure. So that is why I have highlighted this as a potential area to look to sell from. This is 100% valid. So if you haven't done, please pause the video, or just take note of this area and price, because this is going to be an area we can look to short from. And I do believe that price is going to trade us long for the next few weeks until it trades us into this. So what we can be doing is looking for areas to actually buy from, which brings me to these 2 zones here. What I'm going to do is just highlight this one out for you all as well. This is on the 5-minute time frame, so just have a look for yourself. But we're wanting to see price trade down and into one of these zones before trading goes higher into the market. So it gives us the opportunity to actually get involved in those buy positions. Yeah. So marking these out, I'm just going to pull these all the way down and across. Because what we wanted to see now is price to trade down and into this. Let's say if Chuck comes and trades into this one, we want to then see price trade all the way up into that. And then for price to trade lower overall on the higher time frames. And as you can see, that is still following the extreme higher time frame structure. Yeah, I know that looks a bit messed up, but you can see how that would still be following price to come down to trade into this, price to then trade up and into this zone, price to trade bearish. That's still following that bearish structure. Yeah, so it's important that when we do our analysis, our lower time frame analysis and our higher time frame analysis is always correlating. Andy, I'd like to join your VIP membership, but your broker is not available in the UK. Any ideas? You can trade, and you can be a part of the VIP chats regardless of whether you're trading with our broker or not. It would just be more expensive if you weren't trading with our preferred broker. The only reason why it's cheaper if you are trading with our preferred broker is because the commission we make from you trading with our broker, that would cover obviously the cost at which we charge usually. So that's why it's cheaper. Everyone at LAGFX, me as a trader, me as a guru, as someone who I would consider a mentor. I'm going to be completely honest and transparent. As I say, the reason why it is cheaper if you are trading with our broker is because we make commission. We would make commission from your sign up. So essentially, that commission that we're making from your sign up would be paying for your entrance fee into our group chat. So if you are trading with another broker, we would obviously be able to take advantage of that. So it would be the full charge, unfortunately. But if you drop me a message on Telegram, there may be something I can sort out and something I can arrange for you. We obviously do pay monthly as well. You can do pay monthly as well and things like that. So there are options there. Just let me know. But yeah, that's my analysis for XAU USD. Again, we've been rinsing this market through and through. We have done for all year really. We've been doing really well in this market. we are just waiting for price to literally set itself up now to buy into this market, but that might be coming very, very soon. So I'm going to set an alert here as well, given those as potential areas to potentially buy from. Let's just see how price is broken structure to the downside now, which is nice. So we can expect price to pull back into this here before trading us lower. So I'm probably looking to go short in this market as well. What I just want to do is find an area to go short from. So that's been left unmitigated. This has been mitigated by that. That's been mitigated by that. That's been mitigated by that. Okay, so price is probably going to come back to trade into this here, potentially. So let's just say this region. Right there, yeah, perfect. So I want to see price trade up and into this, and then hopefully we can look to get involved in this market soon. Trade price lower. But yeah, we've had all confirmation really. So now, dependent on the high that gets created here, we can obviously just adjust our stop loss accordingly to be just above that high. I usually give a few pips leverage, a few pips as leverage because of obviously spreads and things like that. Not everyone has raw spreads, so I usually put it a few pips above the high that's created. But this is a position that we can be looking to be trading very soon. I just need to wait for the right confirmation for this. In fact, price could come. Just have a look at this. Has price come to clear that? Let's have a look here. What I'm going to do is I'll get rid of that for now. Price has not yet come to trade into this either, actually. So, I mean, this could be somewhere. I'm going to mark this out as a potential area and then just head back to the 15 minutes. So I just want to see how this looks because this may be the area, in fact. 15. So if it comes to tap into there, it's debatable. I'm going to set my alert here like this because I feel like price could come anywhere within here and here. We want to see price basically come back to tap into the zone and then trade us lower. So set that alert there. Let's just see how price plays. Great British Pound USD, still waiting on price pulling back and into one of those. We are seeing very little supply being introduced into this market, hence why we're not seeing vast pullbacks. We're seeing very, very limited pullbacks there. XAU USD, this will be interesting to see as well. NZD CAD, this is just another supply zone that I'm looking to trade lower from. TP is to be set just above, obviously. What I've done is I've highlighted a demand zone here for us to get involved in buy positions. So again, if we're just following this path, you can see for yourself that we would actually be following the higher time frame structure as well as the lower time frame structure. And obviously we want to see price then trade beneath that. But we are following that bullishness as we are within a corrective phase. So we're following the fractal bullish structure, but we are also following the higher time frame bearish structure. Yeah. So we just mark this to here to here. The higher time frame structure is bearish, which we just highlighted, and price would be following. And we're also following the fractal bullish corrective wave there as well. So that's somewhere to look to get involved in any buy positions. I will mark this out for you all now as a potential area. But this is what I say. This is why it is so important that we are following both higher and smaller time frames when we're looking at trading these markets, because a lot of people actually get confused with the higher time frame structure and the lower time frame structure. That just comes with practice, understanding the multiple structures within the market, and not getting confused between them. But it's important that we are following both the higher and lower time frame structure. Do I take trades live? Yes. I mean, if a trade presents itself to me now, I will definitely take it live. It's just whether we catch it on this live stream. But if you have a look on my trading view, you look at the last few positions that I've sent out. I always provide free analysis. So every Sunday I perform something called a Sunday sessions video, and I do that on YouTube. And I basically give zones and areas that you guys can use to obviously trade from. So if you are wanting zones and areas to trade from, look at the Sunday sessions videos, or I've got like a Telegram group chat where I put information out on a daily basis. But more than anything, I mean, I post my analysis on TradingView, and you can see for yourself that it plays out. Yeah, we'll just see what happens. I'll be honest with you, this is the first live that I've done on TradingView. So I know it's live on YouTube as well, but I'm also live on TradingView, and it's the first one that I've done. So just seeing how it goes, really. Definitely catch the Sunday sessions, mate. Yeah, it's worth a watch. I mean, there's so many opportunities that I give out for free. You wouldn't even need to pay for my services. It's literally just a case of giving yourself 10 minutes to watch some of the videos that I put out. Yeah, they'll benefit you tenfold. My Telegram. So my Telegram. Let me see if I can. Trying to think how I can do this. I would put a link in the comments, but I don't want it to. If you go to the YouTube, you'll find a link in the comments. But what I'll do, actually, if it lets me, I don't know if it'll let me share. If it's sharing this entire screen, I believe it might be. Yeah, it is. What I will do, mate, is I'll actually show you my Telegram. I'll show you just some of the things to expect in there, because a lot of people may be a bit undecided. Just down to how knowledgeable I am as a person, the content that's been provided. But I can almost guarantee you that the information I give out to my clients is something that you're not going to want to miss. You know what I mean? So if we just look at this, just going back now let's just go back to the 9th of June. So this was Friday, just so you can see the opportunity that I gave out. So you can see here that on the 9th of June, okay, let me just make this full screen so you can see properly. But you'll see here, on the 9th of June at 20 to 5, I let everyone know that I wanted to see price pull back into this zone before trading goes higher and up and into this market, okay? And I also put the analysis out on TradingView. Now, if we look at this, just so you can quickly see, that's the Euro USD market, and that was at 20 to 4. Sorry. So if we just look at the Euro USD market now, you can see that the analysis that I provided played out perfectly. So that was the zone that I gave, and I gave it at 20. It was 20 to 5, wasn't it? So somewhere here or somewhere here. And I wanted price to trade down and into this, and then traders all the way up into here, and then for price to go bearish. Price has tapped in perfectly, given us that bullish structure we expected, and we're now seeing bearishness being put into the market. So my analysis as of now is absolutely, is bob on correct, basically. So if I just go back to this, you can see that was the zone that I gave, yeah? Price has now played out. There's also another position that I gave. I provide analysis like this with thorough breakdowns on the markets we're looking at trading, giving you guys the opportunity to leave comments and ask any questions if you need to. You can see this is just an update. I like to provide updates regularly with how the trades are performing. Here's just a breakdown, giving you guys just a better understanding on how I look at structure within a market. So if you want to screenshot this now, do so and have a look at it. What else do we have? Updates for fundamental news. I like to provide updates for fundamental news. Euro USD, small Euro USD analysis. This was an XAU USD trade that I actually gave to everyone to take advantage of. We can see how price plays out. We took full advantage of the fundamentals, as you can see. This trade went on to run like over 130 pips. Our stop loss was like 20 pips. So we walked away with like 13%. That's 6.5 RR. You're looking at like 6.5% of your risk and 1% of your equity. You can see clients that have placed positions and profited. So like the analysis that I'm providing is it's up there, and I would say that it's definitely done to a thorough standard. I want to make sure that my clients are happy. I want to make sure that they're learning more than anything. Education is a big thing for me. So this was obviously just a quick update that I sent out last night on this trade. That was take profit hitting this morning with a full breakdown on what I want to see. So as I said here, I want to see price break down and start trading us in a bearish way. And now if we look at price, we get trading view up. Price is now starting to trade us in a bearish way. So as I say, my analysis is playing out exactly as we want it to. I've been in this industry for coming up to 7 years. So my knowledge is, I would say that I'm quite knowledgeable in this field. Obviously, everyone makes mistakes every now and then, but I'll be completely honest with you, it's not often that my analysis is wrong. It's just one of those things. Once you found an edge and once you understand the markets and how they work, it's like riding a bike. It's like when you learn how to do something and you can do it to a good standard, you're always going to perform well, assuming you follow the right strategy and you're following the same strategy that you have in place and you've had in place. Do you know what I mean? So this trade and this market looks to be ready to be placed in terms of sell positions. We're looking like we can look to place some sell positions in this market very soon, which is good. A lot of people may have placed shorts already from this supply zone, which is fine. However, I like to get a refined entry on my position, so I'll be waiting. So we'll look at these other ones. We're just waiting for price to pull back and dig into these demand zones, grab that demand, and then trade price higher with these other markets. But yeah, that's my analysis so far. Hopefully we can catch a little position on here. That would be a good way to end this live stream. If we can just get a little buy position. I don't know why that's happened as well there. It's like some kind of I don't know what's gone on there, do you know? It's a bit weird. But yeah, let's see if we can get a little buy position. A little sell position, should I say, from this market. If you guys have any questions whilst we're waiting, please let me know. If you want me to go over any market specifically, again, please let me know. What I will do, bud, if I can I? Yes, I can. So what I will do, I just don't want to send a link into the chat and me get in trouble for it. So I mean, if you go to our YouTube channel, the links are always in the descriptions of every video. So have a look at that. You should find the links to our Telegram in there. But yeah, I mean, does anyone have any questions? Does anyone want me to go over anything? Any markets? Is there anything you're unsure about when it comes to Forex? Risk management, price action, structure within structure. Is there anything that I can go over? I can help you guys out with just while we're waiting for price to play out. Just check these markets quickly. Absolutely, man. Yeah, it's definitely a good job to start following me. Yeah, I mean, even just looking at like, let me just go to this real quick. Profile. I'm just going to show. It's just going to show like this, for example. So like XAU USD, this one. Obviously, price has gone bearish since, but I told people to buy from here. Obviously, price has traded lower, but we saw that price came down, traded into this demand zone. We then traded price all the way up. we took partials, we took SL moves, we implemented further risk management, and we profited. So we gained back a lot from that trade. Yes, we've seen price trade lower. That was due to fundamentals, but we best believe we took advantage of that move higher. That whole move there was about 130 pips, and like I said to you before, we had a 20 pip stop loss, so we were looking at like 6.5 RR just from that one trade. What else do we have? Euro USD obviously was this one. So this was the see, like, this literally got like no views, which was mad. But was it this one? Yeah. So you can see here, like I'd said to everyone, and I put full descriptions as well. So it wasn't meant to be resells. Obviously, I've said here that I've corrected that. It wasn't a resell. You can tell by the from here we can expect demand to be introduced and for price to put in that next impulsive wave. So you can see that I'm wanting price to go down, traders up and higher into this market. Yeah, and you can see that I've tagged a long position. That was just a typo error there. But you can see how price tapped in, traded us all the way up. Price is now tapping us into this. We've now seen price tap into this. You can see how, like, the bottom of my cursor here hits this wick, and we're probably now going to see price traders lower. So again, that was just another market that played out perfectly. And I do this over and over and over again. I'm always doing it, and I'm always giving out ideas on Trading View. So yeah, I would definitely recommend following, just so you've got that there. But let me just check YouTube. Can you go over NZD CAD? Yes, I will go over NZD CAD. So with this market, let's have a look at this. Okay. So we are seeing price obviously trade in a bullish way. What I like to do is just get a better understanding by going to the weekly timeframes, seeing every last bit of data that I have access to, just so I can get a full understanding of how the market's trading. What we saw is price put in that bullish wave there. We've had a break of structure to the downside. Price just started trading, goes bearish ever since. So I've got this as a higher time frame target for price to potentially mitigate before trading goes higher again. We're seeing how price trading goes in a bearish way. We had a break of structure to the upside though. Price is now pulled back, pulling back. So potentially, because price has broken structure to the upside, price is now pulling back. This could actually be the first initial pullback into one of these before trading goes higher. Do you know what I'm saying? So what we need to do realistically is actually look for. What we would need to do is look for unmitigated areas in price. So this maybe is a candle here, as that's an unmitigated candle. Price hasn't come to wick into that yet. So price may want to actually trade all the way up and into this. And you might be watching this and be like, how are you doing this quickly? And it's just years of obviously looking at markets. So because we've had that break of structure to the upside, that tells me that price is no longer following this bearishness that it was. It's no longer following the laws of bearish structure. It's now putting in bullish structure. So potentially price may want to trade all the way up into here to grab any remaining demand, supply before trading lower. Once we have that bullishness being put in, we can then obviously look to trade price lower and into this higher time frame demand zone, where then we can then expect an entire wave taking us higher. Yeah, so that's probably my predictions for this market. What you'll see if we go down to the lower time frames is I actually want to see price trade up and into this, because it's important that we are following the higher time frame structure. So I want to see price traders all the way up and into this, traders lower into the one or two, and then obviously price to trade up, which is what we've highlighted, haven't we? Here, trading goes up. So that is an area to potentially trade us into, like that. We can see that this is following the bullish fractal correction that price is putting in, but it's also following the higher time frame bearish structure. Yeah. and this is what I keep repeating and I keep saying, but it's very important to understand that we need to be following the higher time frame, the lower time frame, the fractal structure. We need to be following all time frames accordingly, so you can see how that's following bearishness, which is the phase that we're in. So price is currently within a bullish corrective fractal phase. Yeah, so price is currently trading us in a bullish way fractally within this bearish higher time frame correction. Yeah, so we're in a bearish correction. Price is following that perfectly. We are also following this structure. So by price coming down to trade us into here, that would be following the higher time frame structure, because that's bearish structure there. And then by price tapping into here and then trading us higher, that was following the overall higher time frame structure as well. That might sound confusing. But it is so important just to understand multiple structures within the market and to not get too fixated on one. So understanding that every piece of analysis you're performing and you're putting out actually correlates with the higher time frame structure. As I say, the higher time frame structure, right the way down to the 1 and 5 minute time frames. Do you know what I mean? So by performing these top down analysis, we can obviously get that bigger picture there. So yeah, that's my analysis for NZD CAD. If I give you this zone specifically, if you want to mark it out for yourself, please do so. We want to buy into this market from here, trade price up and into that supply zone there. Yeah. So highlight out these 2 points, mate, as potential areas. This one to buy from and this one to sell from, because they're going to be areas that we can look to trade in this market. And if there's any other pairs that you want me to go over, let me know. If there's anything you're unsure about, let me know. Like, I feel like I'm talking about these multiple time frames, and I feel like it may be a bit confusing. So let me just do a little illustration here. So obviously this is clear bearish structure. But within this bearish structure, we are going to have multiple structures, yeah. So we'll go here. So break a structure to the upside. That. Yeah, and we can expect this to continue. Yeah, so if we were to mark this out as a 4 hour time frame, this is a 1 hour, and then we would have the 15 minutes. So then even within each one of these, we would also have more structure. So we'd have another. You know what I mean? And if I just change that to 1, and then we do that as blue. So like within this, okay, within this entire higher time frame thing, so the red line is our, let's say, 1 day. The yellow is our 4 hour, and this is, let's say, our 30 minutes, for example. It's important that, if we can get involved, let's say here in a short position, that would be amazing. But what we could do is, rather than trading like this, so just placing a position here for example, and having our stop loss above here, take profit there. What we could do is we could actually get involved fractally within this market. So we could look at the 15-minute structure. So say that this was here and we were looking at the reversal on the 15 minutes, we can actually get in on a lot lower of a time frame. So we would be able to really refine even if we got in on the yellow structure, do you know what I'm saying? We could really lower or really refine our stop loss, and that's going to obviously increase our risk to reward ratio. So it's important to understand that there are multiple. There's obviously multiple structural points within a market, and understanding the difference between them all. Do you know what I mean? Euro, Great British Pound. It's not a market I've actually traded in some time, actually, so that would be a good one. Let's do this. Euro, Great British Pound. Okay, wow. Let's have a look, see what's going on. So they have been disregarded. So let's get rid of that. This I've highlighted out as a potential area, but I want to just readjust. So I mean, looking at this is an unmitigated last sell to buy region. Reason being, price hasn't come down to tap into this red candle, so this has been left unmitigated and could be an area in price for price to come to trade into before potentially trading goes higher. So mark this out for yourselves, guys. As a potential area, 0.8. 423. Just mark it out on your charts. If you're still hesitant, I mean, I've literally just spent the last 20 minutes going over previous analysis and the content that I provide to my VIP clients. But if you are still hesitant, literally just mark out the zone for yourself on your own charts, just so you can see how price plays out. And if price plays out how I expect it to, then that's just proof in itself, isn't it? But if we just look here, so this is an area that has been left unmitigated, potentially an area that we could look to buy into this market from. Let's just have a look at the overall structure of the market. So when I do a top down analysis, I like to zoom right out. And I like to see how the market is playing out overall. So this is evidently a bullish market, yeah? So realistically, we do want to be looking for those buy positions. We can expect this market to trade us higher over time. So by placing buy positions in this market, we have more of a probability of being successful because the majority traders are going to be trading in a bullish way. Yeah, so that gives us our probability straight away. That gives us our bias straight away, should I say, to be looking for those buys. Now, what I like to do is look within. So when I do zoom out and I do this, sometimes I don't obviously now, but there were a time where I would mark out these structural points like so. Okay, and then we can say that this is actually within this next thing. What I like to do is I like to mark out these structural points just so I have a rule of thumb to work with. So now that I understand this, what I like to do is then zoom in to the most recent impulse and correction, or correction and impulse, should I say, in this way. So now what we are seeing is a corrective wave has been put in. Price is probably pulling back fractally before continuing trading in this bullish way. So by us now zooming in again, just looking at this most recent impulse, we could look to find demand zones within the start of this impulse for price to pull back and traders into before taking us higher. So if we just get the replay button, we go to, in fact, I don't need that just yet, so I can just do this. It's not too far away. So what we would do is essentially is we would look from the very bottom here of the base to see if we can find any unmitigated areas in price that haven't been cleared. There's a hell of a lot of inefficient structure here, so there should probably be something laying. I'm just going to continue going down. Okay, 1 second. I'll just go back to the daily. I'm going to highlight this as a potential area, just because there's a lot of inefficient structure below. We'll probably be able to refine this further anyway. Is there anything else? Potentially that. This comes to tap into this, so that's fine. This comes to tap into this, so that's fine. This, however, has been left unmitigated, so I'm going to highlight this as a potential area as well. This here comes to tap into this. This comes to tap into that. So everything else seems fine. So I've got these two potential areas as well. Just drag these all the way across for us. Perfect. So those are our extreme higher time frame demand zones that price may come to trade into before continuing that bullish leg. But what I have done is I've highlighted this as a potential area because this is definitely unmitigated as well. This could give us some temporary bullish structure. So we may see price traders down. Traders down into here. We then want to see price break structure to the upside. So I just draw this as exactly how I'd want it to play out. So we just follow this path now. So we've got the perfect. Price comes down, price comes up, price comes down. Perfect. We would have the penetration of this demand zone here. That should, in theory, push price up, breaking structure, because that's the last protected high within this bearishness. So breaking structure to the upside. Once price breaks structure to the upside, breaking this protected high, we can expect price to pull back, because within every impulse there's always a correction. So price will pull back. Price will then tap into a demand zone that we will find from this initial impulsive wave that broke the structure. Yeah. And then from there, we can look to trade price higher. Okay. So just to further add to that, this would be the break of structure here. That would be the confirmation to say that this bearish correction, trading goes lower, has finished, and the new trend trading goes higher is underway. So once we've been delivered with that break of structure there, we can then expect price to pull back. What we would then do is we would zoom in, we'd look at this impulsive wave. So if I just mark this out in a different color so you can see, we'd mark this impulsive wave that broke the structure to the upside and find an unmitigated last sell to buy region, just like we have done here. So we are literally repeating the same process, but just doing it more fractally. Okay, so we are just finding another demand zone like this, but within this structure. Okay, so we'd find it within here. So let's just say that we find one here. Perfect. We can then wait for price to pull back. And then as soon as we are delivered with yet another break of structure to the upside from this from this demand zone, that is when we look to get introduced. So we are literally just repeating this process over and over and over again until we've got right down to the fractal nature of the structure, and that is how we are able to get such refined entries on the positions we are placing. All we are looking for is for price to tap into supply or demand zones, break structure to the opposite side, pull back, and then we can get involved. And that we are literally just repeating that process. So obviously within this would be, say, I don't know, this would be a 1 hour corrective wave trading goes lower. Then within here we'd have a 15-minute accumulation. Yeah. So within this here now, we would expect price to trade down and into it, break structure to the upside, pull back, and then that's when we look to get involved. So we will expect this to happen in here fractally, so on the smaller time frames. Yeah, so that's how we are allowing to get that refined entry. So what was I going to say? So if I'm just trying to figure out a way of being able to show you all more fractally, but it's going to be difficult. But that's essentially what we'd be looking for. Okay, and then obviously if we're getting involved on a 15-minute accumulation, our stop loss will be literally like 10 pips, because we're gonna witness this happen on the fractal nature of the structure. So not this structure here, but the structure that's inside that. And then because we understand that that's now flipped to the upside, that tells us that this bearish correction here, this one right here, has finished, and this impulsive wave trading us higher is about to take place. So because we've had that accumulation, we've had that break of structure take place within this, that tells us that this impulsive wave is ready to take place. Yeah, which means we can have our really type stop loss, and we can have our take profit trading goes up. Because this is a bullish market, we obviously want to see price trade and surpass this high. We expect price to surpass this high, or even this high for example, but I would probably go as much as this one, because this is some crazy liquidity sweep. So I would probably go as high as this one. We expect this high to be surpassed because we're in bullish structure. As we know, we have the production of higher highs and higher lows. So every high that's created is broken by the creation of a new higher high. So if we are following bullish structure, this high in theory should be broken with the creation of a new higher high. So by placing our stop loss just below this, it is almost guaranteeing that our take profit can be achieved. Yeah. Now, as you can see, the risk to reward ratio that we would get from this is a 1 to 40. So, and that's crazy. That's crazy. So that's my predictions for this market. So I want want you to highlight this as a potential area to buy from. We just need to wait for price to obviously put in that work, trading us lower. Now, if we were to get involved in short positions before we get involved in those longs, then we can absolutely do so. So I'll give you areas to look to get involved in shorts. If you want to get involved in shorts, go down to the 1 hour time frame here. So price has come to tap into this, so that's fine. So that's cleared all of that. So price has left this unmitigated. So here's a position right here. We could have a trade very soon on this market, right there. I want to see price trade into this. Let me get a path tool out for you. Trade into this and then trade us down. Obviously, we can probably expect more bearishness like this. Trade us down, and then an accumulation state price to trade us up. But that's still following that bearish structure. Because if you look at this, right, a lot of people are not aware of unmitigated candles and unmitigated areas in price. But if you look at this, everything is interlinked. Okay, so what I like to do when I backtest and I practice this strategy is I like to work backwards. So I'll say, right, well, price has come to clear something. So I'd highlight this and I'd go, right, okay, perfect. It's evident that it's come to tap into this green candle here, yeah? So we can refine it to this green candle. Price has come to tap into that green candle because it was left unmitigated. Perfect. Again, why has this peak been created? Because it's come to clear and tap into something here, for example. Perfect. There's an unmitigated last buy to sell region here. Price has come to clear into that. Lovely. Price has done it again here. Well, what's price come to tap into this time? Price has come to tap into this last buy to sell region on this leg here. Yeah. Again, price has come to tap into something by creating this peak. Well, it's actually come to tap into this whole last buy to sell region here. Yeah. Price has come to sweep and clear that. And this happens over and over and over again. So like again here, it's come to tap into this. And this is just a brilliant way to practice and understand what's unmitigated and what's not. And you'll notice that this happens over and over and over again. Again here, what's price come to tap into? Price has come to tap into that. Because that was left unmitigated. We saw price trade lower. Price never came to tap back into this green candle. So price had to clear that before trading goes lower. And we rinse and repeat this process over and over and over again. And it's just a great way to practice. So I'd suggest if you are unsure about unmitigated areas and unmitigated candles, get yourself familiar, because when I say it works like clockwork, I mean it. And it's so easy to not learn, because it's not as simple as that, but just practicing that way, like I've just shown you, is going to really help get a better understanding on these unmitigated areas in price. But this right here is one, and this is what I want to see. I want to see price trade up, just like the market has done here. Price has traded up to clear this. I want to see price trade up, clear this, and then trade us lower. So here is a position that we can genuinely be looking to place in the next, I'd like to say in the next hour or so. So what I will do is I'll highlight this as a potential area for you all. Probably go to the 15 minutes just to make it a bit easier to see. I'm going to highlight this area out for you all now as a potential region to sell from. 8553 and 0.8565 potential sell region. Perfect. So this is somewhere that we can expect to go short from, yeah? What we would do is we will look to sell as soon as price penetrates and shows rejection to the downside. As I said to you earlier, I like to have just a few pips above, just to avoid getting swept out of the market and avoid spreads. Bless me. And then we can set our take profit down and into this. I'll set it just above, just to guarantee our take profit is achieved. And as you can see here, we walk away with a lovely 1 to 6 risk to reward ratio. Which risking 1%, you're looking at 6% returns. Risking 2%, you're looking at 12% returns from this trade here. So that's my analysis for NZD CAD. If you want me to go over any other pairs, let me know. Or if you want me to, if you're unsure about unmitigated zones and areas, again, let me know, and I'll go through that as well. Let me just check how long I've been live. I don't even know how long I've been live. I've been streaming for an hour and 12 minutes. So I want to get a trade out for you all. So this is looking good now. Okay. So this is an unmitigated area that's been left over. Price is looking to come to clear this now. I can see. So we may have a position. We may have a potential trade on here very soon. Just bring Euro, Great British Pound. I've done that one, haven't I? Yeah. If there's any other pairs you want me to go over, let me know. Should actually have a trade on this soon. We're just waiting for price to come to trade into this, and same with this Euro USD. And if you notice as well, like a lot of the time, price puts in these patterns. So when I don't know if you guys throughout your journey have looked at patterns, candlestick patterns and chart patterns, but you'll notice that a lot of the time when we see distributions and accumulations and things of that nature, they usually are double tops, double bottoms, head and shoulders. So that could be like a further piece of confluence for you when you're looking at placing these positions. But even so, like here, we could, I don't know, if we wanted to. So 8, so I'd say 10, yeah, to be safe. The only reason why I would be hesitant with this is just because this seems like, yes, we've had a wick here and a wick here, but I still feel that is inefficient. Let's just see how price plays. And there, and then we obviously want to see price come to trade into this one. But yeah, if you guys have questions, please let me know about my analysis, my experience, whatever it is that you may be unsure about. Let me know. And the good thing with this as well, if we did get involved from here, is because we have a 10 pip stop loss, we could look to implement further risk management, placing, moving our stop loss to entry and taking partials throughout our positions. Obviously, it's important that we do that. But let's just see how price plays out. Set alerts there. Perfect. Did you ever lose money to the market? Absolutely, mate. Yeah. I've lost money to the market 100%. Everyone loses money to the market. You'll never be successful first time round. When I first started trading 6-7 years ago, I blew my account. I must have blown my account 2 or 3 times. Unfortunately, I was following guidance from they were they were said to be, Forex mentors. They really weren't. They didn't even understand the basics of risk management. So I was just placing positions with an over leveraged account, and I was really over leveraging. I was risking maybe half of my equity per trade, which is stupid. Yeah, I must have blown my account a few times, and it was only after blowing my account a few times that I actually sit down and go, bloody hell, I actually need to learn how to do this properly if I want to be successful in it. So yeah, I spent 18 months creating a strategy and creating a way of trading that worked for myself, putting my psychology in check, and yeah, everything's gone from there. Really, I started to see consistency with my trades, and then over time, my success rate has increased. So when I first started, maybe I would win, I don't know, 5 trades in every 10. But the good thing was, because my risk to reward ratio was always at least a 1 to 2, I was always profiting overall. My account was growing. And then as the years have gone on, I've literally just further refined my strategy and the edge that I have. My psychology has improved, my emotions and how I control my emotions has improved. And yeah, now, I'd say maybe I would lose 2 positions out of every 10. Do you know what I'm saying? So I'd say maybe an 80% success rate. Um, and then obviously my risk reward ratios are always really good. So we're always profiting and doing well now. I only ever trade Forex. I've only ever traded Forex. I trade some precious metals, obviously gold, but I don't really trade Nasdaq or anything like that. No, I see a lot of people do trade them. For me, it's just I like them. I like the Forex markets, just the way they flow, the volume that's introduced based on fundamentals, the volume that is there anyway. Yeah, I just prefer the way that they move. To be fair, but the strategy that I have would work for any pair, and would work for anything. Um, it's just the markets. I've dedicated my time to these markets. I've traded gold since I've been competent. Um, I've traded gold for like 5 years, so I understand gold like the back of my hand. Um, and this is the thing as well, right? A lot of people will say, I've traded for 6 months, or I've traded for a year. That means that I'm successful, and I've made money. Da da da. But yes, you've traded for a year, and you may have been successful. You may have ended that year in profit, but does that really mean that you are, a competent, successful trader? I wouldn't say so, because in a year's time, you've not really traded multiple market conditions. You know what I'm saying? Um, you've like I've traded through COVID. I've traded through so many different market conditions, so many different fundamentals that have impacted the markets. I've traded through them all. Do you know what I mean? So, um, yeah, I think it takes a lot of. I'd say it takes a few years to really be competent in this industry, because there's a lot of things that can throw you off, and a lot of things that can change, and there's multiple market cycles. So there's loads of things to be made aware of. Do you use chart patterns to trade Forex? No. Although I don't use. So this is the thing, right? So a lot of people will say, "Oh, I trade based on chart patterns. I trade based off candlestick formations. I trade based on I don't know, indicators, things of that nature." These things, okay, indicators should never be used as a main source of your analysis. Indicators should merely be a way of getting further confirmation on the analysis you've already done. All right. On top of that, the same applies for candlestick formations and chart patterns and things like that. So when I perform analysis, and when I do my analysis on a market, I will mark out where I want price to go. And when price does play out that way, you'll notice that actually chart patterns are being put in. So, oh yeah, there's a head and shoulders, or there's a double top, or there's a, you know what I mean. And it's good to have them as added confluence, but never as your main source of analysis. Your main source of analysis should be based on market structure, and it should be based on these mitigated zones and areas, supply and demand. You should use proper ways of analyzing the market, and then just using indicators, chart patterns, candlestick formations as just added confirmation that your analysis is actually correct. Yeah, never as a main source of analysis, because that's where people go wrong. People are too heavily reliant on on chart patterns and things of that nature when you shouldn't be. Do you know what I'm saying? So yeah. Do you analyze US dollars? Or I can analyze US dollars. Or I've never analyzed US dollar against R, but I can do. That's not a problem. I'm just interested just to see how this plays out. We have seen price penetrate this zone now, so it'll be interesting to see how this plays out. Let's just leave it here for now. What I've done is I've set an alert just above where our stop loss is, just to see if SL hits. But this is again is something I've analysed for you guys. Obviously, if you'd got involved in this market, I mean, it's probably only running 4 pips, so just shy of 0.5 RR. But let me have a look at. Let me do some analysis on US dollars. Okay. This is a market I'm not familiar with at all. I've never analysed it. So I'll just do a full top down. Okay, so we're looking at this market. When we do a full top down, I like to do this just so I can get a better understanding of how this market is performing over time. So evidently it's a bullish market. Price started down here, price is now up here. On top of that, we've had clear bullishness, so that's great. So what you can also do, just so you can mark out swing points, is mark out the swing points. So like this. The reason why we do this is because then we have areas to work with. So then I zoom in and I look at the most recent impulse, the most recent correction, and the most recent impulse. Price is trading within a bullish way. So we've just had price break, surpass and create a new higher high. So what we can expect now is for price to pull back to create a higher low, before then going on to create a higher high again. Yeah. So, I mean, looking at this structure, I can already see an unmitigated candle that is screaming out to me. So this right here has been left unmitigated. So this could be an area that price could pull back into before trading goes higher and up and into the market. So that's definitely somewhere to be looking for. So that's that. Let me just have a look and see if there's anything else. So this comes to tap into this here. This comes to tap into this. This comes to tap into this. Yeah. So what I think price is going to do now is price is going to put in a corrective wave, trading us lower into this market, tapping us into this unmitigated last sell to buy region, before then going on to take us higher, setting that new impulsive wave, trading us higher. Yeah. So we should be looking to go short in this market. We've probably been delivered with a break of structure to the downside already. If we go down to the fractal nature of this structure, yep, we've had a break of structure here anyway. This marks the last structural point. Okay, so just change the color of this to, sorry, hold on, change the color of that to white. So what we can expect is price to probably, so price was pulled into that, so that's fine, that's been mitigated, that's been mitigated by that, that's mitigated that, that's come to clear that, that's come to clear that. Okay. It all seems okay in that respect. But what we want to do is we want to find somewhere. Hold on. Okay, here. You could argue that here. So I do believe price may actually pull back into this, give us an area to get involved in short positions, and then obviously we can then go long from that higher time frame demand zone. Okay, so we've been delivered with the break of structure. Perfect. We now want to see price pull back. By price pulling back, it's then setting a lower high, and then price is then going to carry on trading and goes bearish. Yeah, so you can see here, and you were talking about chart patterns and things like that before. You'll see that actually we go like this one. We go here. We could go up to there, which is that. So that's our shoulder. This is the head. This is the second shoulder, and that is our head and shoulders pattern. That's our neckline. So you can see that the way I analyze and the way I do things is all based off supply and demand, and we are finding specific zones and areas to allow us to get these trades. But it does encourage those patterns. So you can see that's a clear head and shoulders pattern right there. To those who are asking before about Giddy Kip, when you mentioned about chart patterns, they naturally happen and they naturally occur within our analysis. They shouldn't be done or they shouldn't be made reliant. It should be just, oh yeah, this is also correlating with this as well. So yeah, that's my analysis for this market. I do believe price is going to pull back. So what you could do is you could actually get involved in 3 positions here. We could wait for structure to break to the upside. So if I go to the 30-minute time frames, mark this out as a last structural high within the 30-minute time frames. So mark this out as a structural high. We want to see this break to the upside. So BOS needed. Once break of structure to the upside has happened, that tells us that this bearishness has finished and the new bullish structure is ready to take place. Price will pull back, traders up and into this. That's when we then get involved in those higher time frame shorts. And we trade price all the way down and into here, where we then trade price higher. Yeah, so this would be our setup. So I can get rid of that one there, get rid of that there, and that would be our setup. So I go down to the day, go back to the daily. Just move that to there just to make it look a bit neater. You can see that we are following the higher time frame structure. As you can see, we're following the higher time frame structure perfectly. But then when we go down to the 4 hour, 1 hour, 30 minutes, we're also following the lower and fractalized structure in the market as well. So we expect price to pull back, break structure to pull back and tap us into this before trading goes lower. And in doing so, we can take advantage of those buy positions, shorts, and then the buys yet again. Yeah. So that's my analysis for this pair. So I do want to see price break structure to the upside. So mark this out as a last protected high. As soon as we have a break in that, we want to see price pull back, tap us into a valid fractal demand zone where we can then trade this market all the way up and into here where we can then go short. Yeah. So that's my analysis for US dollars are. I hope that helps, man. And hopefully you can profit in that. What I'm going to do is I'm actually going to mark out these points myself because be some good analysis to send out to the clients there. But yeah, that's my analysis for this pair. Let me just check on this one. That's fine. USD. Okay, perfect. So if you haven't got involved in this market, then we could look to get involved now from this. Let's just see how that reacts. But yeah, this is now trading us. Traded as nearly 1 RR this market. So anyone who got involved in shorts should be in profit now. What you could also do if you wanted to is you could move SL to entry just to make the trade safe and risk free. Because I don't see why price, unless price is continuing to put in a correction and wants to actually trade us higher and into this, I don't see why price should surpass this here. Price may come to actually sweep the zone more, but maybe not. But yeah. Let's start there and then Potentially short from here. Let's see. It's important that when price penetrates these zones, we obviously wait for rejection to the downside before entering. If we see high volume candles like this being introduced into the market, it's probably telling us that there isn't enough supply within this to actually trade price lower. So we'll probably see price come to surpass this, but let's just keep an eye out anyway and see how this trade performs. How this would perform, this zone here. Price may come to obviously sweep this original zone. We've not had price literally tapped in here, so it's very, very light penetration. It wasn't a case that we've swept this whole area before trading lower. Do you know what I'm saying? So any other questions as well, let me know. Johan, what experience do we need to start trading to not lose everything? Is there a way to learn the basics to trade safer? Absolutely, mate. Yes. So I actually have a little it's called, what's it called? I've got so many names for things on the website. Bear with me just 2 seconds, buddy. Let me just get this up for you. It's called one second. I think it's the booster pack. The booster pack, it will tell you all about psychology, and it will tell you everything you need to know about risk management as well. I'm just trying to find this now. One sec. Where is it? Classroom. And on top of that, we also have the Forex Genie as well. The Forex Genie is, like, to be honest with you, I'm probably going to put the price up on the Forex Genie, because the Forex Genie is that is going to really help people. But yeah, no, the booster pack. So the booster pack includes, so psychology and everything about risk management. So smart target, so your risk management guide, and it's got PDFs in there basically to go over that. The most important things are obviously your risk management and the psychology and trading. But this, I'll show you this Forex Genie now, if I can get it up, because the Forex Genie is a game changer. Forex Factory, close that, close that. Okay, so let's have a look at this. So the Forex Genie that I've built, this is just a way of managing everything. So managing your trades. So you would essentially put in, just wait for this to load up. Perfect. Okay, so this is designed in a way to help us traders basically be as profitable as possible. Okay, so if we just look at this, this is like your this would be your profile. This is your account overview, and this is just a basic look at how you're performing overall. So this shows your account balance over time. Okay, here you would set your targets. As you complete targets, they would, you have a completion bar, 5 main Forex goals, things of that nature. You put in all your credentials here, and then we have quick links, our broker, Axie, my website, and then trading view, so you can do your analysis. Now, this trading performance overview, this will change and adjust as you put in more information. So, when you put in the trades that you're placing, we'll have your currency pair ratio, so what pairs you trade more than others. We'll have your win to loss ratio, so 80% win ratio. You've got 5 wins, 1 loss. Here, your buy to sell ratio, so do you buy more? Are you more of a bear, or are you more of a bull? Quick links to Forex Factory. And then this is your mood and trading performance. So when I say this Genie that I've built is a game changer, I mean it, because this will monitor your performance right the way down to right the way down to your mood, essentially. So that's just the trading performance overview. If we go to the LAGFX calendar, we are in the month of June, so we would click on June. This takes us to June. We can obviously, what we're on June 16th, so live on YouTube. You can put in everything you need to on the calendar. When you want to go back to the top, it takes you back to the top. We want to go down to December, we go down to December. So this is a great way to put in any fundamental news that you want to be aware of. Also personal things. If you want to put anything personal in there, then you can do that as well, obviously. So that's your calendar, which I think is important because we need to stay up to date with fundamentals regardless of how we trade as people. Then if we go to daily planner, we just click on this. It takes us to our daily planner. This is for when you place positions. So it's important that before you place a position, all of these are ticked. So it's made sure that you're following your strategy. So you've checked the economic calendar for any upcoming news and events and their impact on the currency pairs. You've conducted your technical analysis on your watch list. You've determined the entry points and stop losses, as well as take profits for the trade itself. You've used your lot size formula to determine the right lot size for your risk. You've considered market sentiments and market volatility, so how much volume is being introduced into the market, and you've also ensured that you have confirmation criteria. Your confirmation criteria has been met before placing the position. Once that's done, you can place your trade, and then these are things just to help on how to manage the trade, and then obviously things that you should do after you have placed the position and closed it. Once you're done, you click clear, and it clears it, and you go again, and you have the 1 to 5 with that. Now, my favorite thing about this is the compound interest calculators and the lot size calculators. So these are going to make your life a hell of a lot easier. So let's say you had a starting balance of £500. You'd put that in here. That is going to tell you what 2% of your equity is every single time. 2% of 500 is 10. And it also allocates it to this field here as well. Now, when we are dictating our lot size, there is a formula that you can use in order to ensure that you only risk 2% of your equity for every trade that you place. And this is the formula here. So say that you're placing a position now on NZD CAD and you've got a 15 pip stop loss. You would put in this formula, so 2% of your equity divided by stop loss in pips divided by 10, and that is going to give you your lot size for that position. So it does it all for you. The only thing you need to change is your equity size and the stop loss in pips. Other than that, it automatically tells you what your lot size is for that trade. So that's going to ensure that you're using the correct risk management for every position you place. Now, let's say that you want to, here, for example, you want to decide, or you want to decipher how much you could make over the course of the year, for example. So you would enter the amount of years you plan on compounding for in this field. Here, how many periods in the year are you compounding? So we've just compounded once, so it'll just be a case of doing it at one time. And then how much are we compounding by? 60% of 500 is 300. That gives us the right result, essentially. Again, here with the future value target calculator, say that you said that you wanted to have a future value of £10,000. You want to make 10 grand with a starting balance of 1,000, and you want to do it in 5 years. That's exactly how this is laid out here. And what you'd need to do is you'd need to make 58.49% a year, every single year for 5 years, in order to make that £10,000 goal. Now, I've got clients who are making 10, 15, 20% a month on their equity. So this is another way of, deciphering, well, how much could I make? And even this way, how much could I make working with LAGFX? Yeah. This is obviously just your lot size calculator for all of Great British Pound, all for the UK clients and your European clients. This is the formula that I would expect you guys to use. Now, the trading data sheet. This is what you'd need to fill in order to get results to show on here. So you can see that on the 14th of the 5th, I had an equity of £1,000. And by the 4th of the 6th, I had an equity of £2,000. Now, this is obviously just an example, but this shows on here when you're filling this out. So, as I say, when you type this in, so obviously your account balance afterwards, that's after placing that position, we'd copy this and put this in here just so we have it for our next trade. That tells us that our risk value for the next position we place should be £40 because 2% of 2,000 is 40. So that's how much we're risking on our next trade. Now, let's say that we walk away with we have an imbalance after placing a position for 2,500. Yeah, that means that we have made £500. It automatically does it for you, so it tells you how much profit you made, and it does your profit and loss in a percentage as well. So then you put win on here. You'd click, it was a buy position on Great British Pound AUD, and we placed this trade on the 5th of the 6th, 2023. Now, when you go to here, it shows that. It automatically updates and shows you. So that is your trading data sheet, and it's just a brilliant way to monitor every position you're placing. Now, your mood tracker acts in a similar way. So the more you fill this out, the more information we're going to get on this here. And the important thing, or the good thing about this, is when we are filling out these things, we are getting a better understanding on how you perform as a person based on your mood. And you can put additional notes in here. And you also have a guide as well to show you, because we feel it's important to reflect on your trading performance based on how you're feeling and the mood that you are in as such, because that is obviously going to have an impact. But yeah, that's the Forex Genie. I definitely would recommend it to anyone who was looking to obviously get involved in these markets and looking to trade and be serious about trading. As you can see, prices seems to be playing out well. It's come to sweep the zone, but it seems to be playing out well. It'd be interesting now to see how price plays. But anyone who got involved in short positions, you'd be in profit now, which is brilliant. So well done. Great British Pound USD. We're still waiting for price to trade us into this. That we're still waiting on that. Still waiting there. Yes. Still waiting for price to pull back into this as well. But that's definitely a position I will be looking to place on the Euro Great British Pound. So if you haven't marked this out, please mark this out as an area to potentially sell from, because we definitely will be looking to sell from this. Just going to stretch that out. I like everything to look right. Perfect. That's our trading setup right there. But yeah, I mean, do you guys have any questions before I call this session a close? If you do, say something now before I end the session. I've been going for about just shy of 2 hours now, so. If you guys have any questions, let me know. Okay, I take it as we don't have any questions. So what I'm going to do is wrap this stream up now. I do have a one-to-one session with a client in 15 minutes. So I'm going to wrap this up now. If you guys need anything, let me know. If you guys aren't involved in the Learning Lounge group chat, the VIP services, definitely get yourself involved. I'm not selling you anything, but if you're interested in Forex and you want a reliable Forex guru, mentor, whatever you want to call me, then I am a good person. I would suggest myself. As I say, the things that I've gone through today, it's proof in itself that the way that I trade works. I've gone through previous analysis. I've gone through previous trades. I've shown you the strategy. I've shown you everything. So you can make your own decision based on that. But yeah, if you guys have any questions or have or need me in any way, shape, or form, just drop me a message on Telegram, and I'll be sure to get back to you. But these are the setups that I currently have for these markets. What I'm going to do is I'm actually going to post them in the Telegram group chats, and I'll update these as time goes on. And yeah, I hope you guys have enjoyed. If you have done, leave the stream a thumbs up. All the support you guys provide is really appreciated. We are growing every day, which is really good. I wouldn't say slacking as much, but I've just not been as active on YouTube and posting social things of that nature. I've literally just been so focused on the Telegram group chat and making sure that the clients are happy, that I've not really allocated enough time to our social media. But I will be posting more often, and I will be doing these lives more often. Because I think it's just an important way and a good way to obviously promote what we're doing here and the changes that we're making to people's lives. But yeah, let's just see how this is playing. So I mean, if you guys could have got involved in shorts there with a very tight stop loss, you probably would have been looking at 2 RR now with that. It's running 1 RR from this original position anyways. Yeah, I'm probably going to try and find an entry for the clients. Probably here, maybe as an entry. I think price may come to trade up and into this. So I'm gonna let everyone go because I need to allocate some time to the guys in the VIP chat. But yeah, I hope you guys have enjoyed. And if you do need me, as I say, please just drop me a message and I'll get back to you as soon as possible.